This is Alan Bush with the Daily Financial Forecast for Thursday, March 31st. Starting out with the stock index futures, we are seeing prices just a little bit better this morning. We did have economic reports that were somewhat offsetting. We did have the Chicago Purchasing Managers Index coming in a little bit stronger than expected, but jobless claims coming in also a little higher than anticipated. Also, we did have, at least we appear to be on track for March to show a 7% increase for S&P 500 futures. This compares to the previous 3 months of lower prices. Also, we are higher on the year now in the S&P and the Dow. So good gains in the indices, and we anticipate that low interest rates globally and a Fed that is likely to be slow to raise interest rates will continue to support stock indices in the long term. Now, moving over to the currencies. I was just on the trading floor a little bit ago. A lot of the traders in the currencies are a bit dismayed that the dollar has not held up very well at all. In fact, it's putting in a rather poor performance. One reason is that even though the Fed is the only central bank that is anticipated to raise interest rates this year, the series of rate increases that were expected have been scaled back now. In fact, the Fed in December said there would be 4 rate increases. Now, more recently, they said that there will be 2, and then financial futures markets predicting now maybe just 1. So the dollar index underperforming quite a bit, even though interest rate differentials still remain somewhat positive, but are less positive when looked at from a point of view of all of these anticipated rate increases that have been scaled back. But the one currency that we think does have potential, and that's potential on the downside, is the British pound. We did have, in fact, today 2 reports that were bullish for the currency of the UK, and yet the pound is a little bit lower, as traders center more on the possibility that the UK will leave the European Union, and there's a referendum scheduled for that question on June 23rd. So the pound, I think, is the currency to be trading from the short side, and that would be the one currency that I would focus on. Also, in the interest rate markets, we are seeing futures narrowly mixed. Fundamentals seem to be offsetting. I don't think I'd get too involved in the interest rate markets right now. Also, we are seeing that the probability of a rate increase at the June meeting now at just 23% and 53% at the December meeting. So those are both lower from yesterday. Also, some of the markets we don't really talk about that much, gold and silver. I think those two should be traded from the long side, as inflation levels, at least core inflation levels around the world, seem to be headed higher. Also, we did see production peaking last year in the gold market, and it is likely to decline over the next several years. So we do like gold and silver from the long side. Once again, we like the stock indices from the long side and the pound from the short side. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.